All right, so today we're jumping into both Flexa and AMP. Maybe you know it more so as AMP, but we're going to dive in a little deeper about what all of this means in terms of the payment category within crypto. My name is Paul Barron. Welcome back to TechPath. Today, joining me is Tyler Spalding, who is the CEO and co-founder of Flexa and also the Digital Payments Network. You guys are working on a lot of things there at Flexa Network and, of course, AMP. And great to have you on the show here, Tyler.
Oh, absolutely. Thanks for having me.
Where are you based? Tell me a little bit about where Flexa's home base is.
So our headquarters is in Manhattan, New York, which has been a little challenging to say the least, being a digital currency sort of operator, money services business, everything we're doing in crypto. So, but it's actually been a great strength for us. So there's a lot of great people here, and us, and kind of the way that we've approached licensing, kind of just doing all this the right way. It's actually been a really great opportunity for us in the long run. So, but a lot of work that is not slowing down anytime soon, that's for sure.
I think with anything in the payments sector, the regulatory side of it, obviously being there in the backyard of Wall Street always helps, just because the access to, different companies and also talent pools that can really kind of help businesses grow in that state. We here are based in Miami. I feel like we're the Wild West or the Silicon Valley, Sand Hill Road, somewhat of crypto now. And more people coming down here. I get texts and DMs on Twitter constantly that someone's moving an office down here or they're getting ready to launch a project down here. So it's kind of cool. New York and Miami, perfect, which is kind of odd, being not a Silicon Valley based initiative for something that is so technically oriented here. It's very interesting to see. Very cool.
Yeah, and on our side too, it was very deliberate. So I mean, we absolutely set it up here because of the things you mentioned earlier. So like just the ecosystem that's here. So that's really where we want to play in, kind of the long-term view that we have.
For our viewers and listeners, explain to us the Flexa Network, the process in terms of what you're trying to achieve in the payment space and how this is so connected to AMP. Kind of give us that story of how those two came together.
Sure. I'll give more of like a kind of the foundation of Flexa itself, because I think that then understanding that, and then you can kind of understand how AMP might fit into that picture.
Right.
So Flexa being a new digital payments network, the main thing that Flexa does is that it will connect to all the hardware and software that a merchant will have. So it's online, in stores, whatever hardware already, whatever terminals are there, whatever software they're running. So Flexa, our goal is to integrate with all of that as best as possible. And then what we do is we open the other side of the network to really let any app in the world use those digital assets to pay at a point of sale or online. So Flexa is not an app, it's actually not a consumer company, where all of that infrastructure layer that sits behind the scenes, that's a new payments pipe essentially, connects to all the merchants, makes it very easy for them. And then we let any wallet, so whatever app you already have on your phone. So there might be cryptocurrency wallets, which is fantastic, and we love supporting that, and there's been a lot of growth we've seen so far. But it even starts extending to any other app that has value on your phone. So it could be a loyalty app, it could be an airline reservations app, it could be a hotel app, it could be your banking app. So even your traditional banking apps, to use those at a point of sale, need all that other connective tissue. You can't just take your typical banking app and go scan a QR code in the US and have payments all get made. And so that's really what Flexa is about from day one. So we can accept any digital asset, or we aim to accept any digital asset through our system. And right now, the cryptocurrency angle from the very beginning has been super exciting. We're adding more and more of those assets, and we enable that now. So what all that means for kind of the everyday listener or consumer is that you can have these apps and you can spend Bitcoin, Litecoin, Ether, some of these other assets literally right now in stores, Nordstrom, Baskin Robbins, Lowe's, Petco, literally right now, you can take these apps and spend those in-store Bitcoin instantly and with no fees. And so that's what we've enabled, that we're really proud to have out there kind of in the wild now.
How does this differ in relationship to, say, the Lightning Network, where you've got, a layer 2 solution that is plugging in directly into Bitcoin? Obviously, that Lightning is directly tied to the Satoshi delivery versus what you're talking about is going across a variety of different digital assets. Explain the difference there.
So there's some similarities, but in general, so Lightning Network will be absolutely compatible with Flexa, and we're planning even on launching some Lightning-enabled payments very, very soon. So what you'd use Lightning into Flexa essentially, because
Okay.
again, going to like that first part, it's connecting to what the merchant has. So right now, you couldn't take a Lightning invoice and create something like that at a merchant point of sale, or the merchant actually receiving Bitcoin. They would have to have other Lightning infrastructure. They'd have to have compatible software to receive that information. And then, more often than not, the largest merchants are going to look for USD or cash equivalents because that's how their operations work. So we also serve as that ability to give them Bitcoin if they want, but we could also exchange that then for dollars directly into their bank account, which makes it really seamless for them, exactly the way they've already received other types of payments.
So it's really more of a Rails solution, not necessarily like a merchant processor like what you might pick up with a Visa or some of those, like a Stripe payment system or something of that nature. It's
Uh,
the rail infrastructure there.
Yes, there's a lot of weighted words and interpretations in the comparisons and even the companies. So I'm like, yes, no, maybe, yes. But what you are intending to say there, absolutely 100% is true. Yes.
Yeah. So when you look at kind of the infrastructure that is currently in place for payments, because that's what we seem to be seeing in the cryptocurrency space, really in general, I think blockchain technology is this massive shift to what could be really a new evolution in how payments are transacted from what we are, and have been using maybe for the last 2, 3 decades for credit card usage. How does this, from an aspect of Flexa, will it be able to function underneath the hood of, any kind of app or solution that I've got, mobile or online payments for e-commerce, any of those kind of things? Like, say, for instance, Amazon says, yeah, we're going to accept, cryptocurrency now. We're going to take Dogecoin or wherever it might be. Would Flexa be the rails that would essentially plug into the crypto solution?
That is definitely the aspiration. So we are building the functionality and the ability to facilitate all those sorts of payments worldwide. We have an online offering in store. So exactly what you're mentioning is the goal for sure.
Yeah. All right. So back in September 2020, you guys announced your capacity migrating to AMP. This was the time in which you did this. The mission was to kind of go in this direction. Why go that direction with AMP? What was the reasoning behind selecting AMP as kind of the partner there?
That's a really great question. There's actually, quite a few details. It was mainly the collateral token. So the overall use and mission and the functionality of Flexa, all exactly the same. So nothing really changed at all. But the network token that's used to basically collateralize all the payments within Flexa used to be a different token, and we migrated it to a new
Right.
one primarily because we invented some new technology that we think is going to be very, very compelling and making it more usable in the staking and collateral case. So without going into too much of the details, the real technical details, we now allow the token to be stakeable without actually sending it into another smart contract, which just gives a lot more flexibility to the end user or entities. So if we have large entities that are now participating in Flexa, they don't actually need to take these tokens and send them into some other smart contract. They can actually maintain custody of them, and they're sort of like delegating the collateral, similar to how you delegate a vote. And that technology now exists in the token contract. So we're going to be rolling out new versions of collateral contracts, capacity contracts in the future. And so it's really all about that novel technology that we knew we would start to harness a lot in the future. So we're actually not quite even using it in the current capacity contract because of even just easing things along. It's all about like kind of progressive progress and trying to have people understand how this all works. And we feel like if you change 4 things at once, it could be a little too much. So we're kind of easing into that. But that was really the only real thing that happened was the token itself just migrated to a different token because we have some new technology that we really, really wanted to implement for the collateral token itself.
And of course, AMP being the collateral token for Flexa, they had it there. They've continued to really kind of build on the protocol Has there been any major achievements that the AMP team has been able to do that's kind of coincided with, basically giving you guys some new potential tools and offerings to go out to the market with?
Yeah, I mean, probably the biggest thing is just DeFi in general. So
Hmm.
what that means and the various integrations and things around AMP specifically, whether it's money markets or other integrations that allow the token to be usable as collateral and interchangeable and interoperable with other protocols or other layer twos. I mean, that's a really big one right now of all the various costs that you're going to see, security and costs around
Right.
staking, moving assets. And so that's evolving very quickly. So the more that AMP is participating and partnering and being a part of all these other projects that are out there, that will benefit all of us. And then particularly just the overall, true utility of the token for people to be able to, now use it on an exchange as collateral or for other types of
Hmm.
transfers. And so that's kind of part of that mission too. So that's been really exciting to see that evolve just as incredibly fast as it has.
Yeah.
So DeFi is still being so early, but it's almost just the exponential growth that we're still seeing with it has been absurd.
We've seen some, obviously we had the biggest hack in history, kind of hack in history with Poly. Funny story there, but the point is that there is a lot of movement in the DeFi space, both from a security aspect and that concern that a lot of companies and investors have in terms of, moving in that direction. You guys seem to somewhat solve a lot of those security ailments for the industry around payment transactions, at least. Talk to me about how you see, Tyler, kind of the future of where, because the typical old infrastructure of payment processing and payment architecture versus where you see it going in the next few years.
Well, I guess the main point there is that all these other payment networks and everything that really exists is more 50 to 60 years old. So it was all
Yeah.
built without any real digital concept in mind. It's all analog. And so
Hmm.
you can't even use some of these great technologies that we have, or the security, for instance, and that, in a payment card transaction, having all the user data, account number, all the sensitive information getting passed through 12 different parties, relayed. So it's only just a matter of when the information gets compromised as opposed to ever if, right? So that's
Right.
just like the general foundation that we're trying to avoid or evolve from. But the biggest thing that we're seeing that I now absolutely think is going to become so incredibly prevalent in payments, and this is also where AMP really fits in, is you just centralizing or distributing the risk in a transaction. So whenever
Hmm.
a payment is made, there's a buyer and a seller. That transaction needs to be made, right? So the payment needs to get made. People need to agree that that actually has occurred. But then even more importantly, the funds themselves actually need to be genuine. So who is to say that those funds are real? They're in your wallet when we're looking at digital funds. So this
Right.
is where distributed token networks have just completely stepped up to where this is the best thing that they can actually accomplish. And so what Flexa now, by extension AMP, we use AMP as collateral to decentralize the risk in payment transactions. So now, rather than one entity just saying, "Oh, is this transaction good or bad? Can I,
Hmm.
assess the risk?" We're now letting the network be able to do that, which is, having consensus on these networks is one of the best possible things that they can do. And it's not just that that's necessarily a better system; it becomes almost infinitely cheaper to do it that way. So we're
Yeah.
seeing things around like payment costs and all the other net effect of a payment flow becoming maybe 1% of the previous cost to actually facilitate a
Wow.
transaction. And so that's where it gets super interesting. And so that's not to say there won't be plenty of centralized, components along the way. We're still, the way that we work, still have banks, still have money going through the system. There's still all these other pieces that still do add cost, but the predominant cost is the risk, and that authorizing a transaction, making sure the customer is legitimate, the funds are legitimate, the transaction is authorized. That's where the meat of it is. And so
Hmm.
these new distributed networks just eat away at that dramatically to where that is 99% cheaper in that primary component. So I can only see that getting bigger and bigger, and you see it with entities releasing their tokens, other payment mechanisms, things like DM, all these other projects, because it's not that they like it or necessarily even believe in the technology. It's because it's so much cheaper, and
Right.
all in, it is a huge benefit, and it's inevitable then. So they'll use that, and they're absolutely going to use those systems when they can.
Well, and you also have, the application of global infrastructure at play, and now you're using it down to, the core level of just transacting individual payments, which is going to be another scenario when you plug in potentially, a billion users into the crypto ecosystem. It's definitely going to have some infrastructure, strain on what we've seen in the past in terms of what our existing infrastructure consists with. Where do you see the application uses being the most prevalent with the use of Flexa? Is there one particular area, or do you feel like this is just going to kind of flow across a variety of different industries?
Wow. For us though, it could start moving into other types of payments. So for us, it's going to be really that focus on just retail payments. So
Hmm.
e-commerce, traditional everyday spending, everything you can buy at your local store, online, otherwise. But it's really going to be that heart of just commerce. That's what we
Yeah.
want to do really, really well, better than everyone else, and it's a long-term task that involves all these other integrations and the complexities behind the scenes. And so that will keep us busy for a very long time.
Now, you mentioned a few different, I'll call them vehicles that you could utilize in terms of transacting value across something. And I look at this kind of like what you might see in loyalty applications, where at some point down the road, we're probably going to see retailers start to build up their own loyalty systems, much like what you see these exchanges doing their loyalty tokens. If you think about
Mhm.
Voyager or Binance or any of them that essentially kind of have their own infrastructure there. But with companies, if they do start to build that, in being able to take that as a usable, would you be able to transact something across other than a digital asset in terms of the payment architecture itself? So it's just really just a movement of, you have value over here, it's going to send it over here and keep a track and a consensus on what that exchange was. Is that something that the capability of Flexa would be able to do?
100%. And that's will be one of the use cases for sure, because that's some of the limitations, right? In using a lot of these
Yep.
loyalty programs or having these assets, right? And I can't, if I have to go online to a web app and then maybe redeem it for some select gift cards or maybe get
Yeah.
a flight in the future with some of these blackout dates and all these other things, it's like it starts to become cumbersome and just not nearly as valuable to the end consumer. But if you
Yeah.
start unlocking that and say, now you do have these assets and you can spend them at the store down the street, or they're literally unlocked to use like cash. That becomes not only great for the consumer, but ultimately even great for the merchants and those ecosystems, because now you want those points and you actually want to use even those apps that they have. So that's another important piece. It's not about just moving these assets all around to other apps, it's using them natively where they sit. So we're
Yeah.
not creating some new universal app where it's like, oh, you now have to use our thing and put all this in
Hmm.
here. Like, people don't want to do that. They have a few apps on their phone that they use, and that's what we want to enable for the consumer, like kind of unlocking the value where you have it and no other changes. Just tap the button and now it's usable somewhere else in the same sort of a
Yeah.
flow too, which is really important. So we've spent a lot of time like in that flow and how it actually works even at a point of sale.
I don't think people really understand the infrastructure system when it comes to payments today, of all the things that have to happen when you swipe a card or just use your app on your, Apple Pay, for instance. Just the amount of infrastructure that goes into putting those payment transactions in place is pretty amazing. So essentially, you're talking about Web 3.0 and the evolution of where payments and transactions will be conducted in the future. This seems like it would be absolutely an exploding market. With that being the case, we've got, the recent legislative issues that are addressing this. Will that have any effect on your industry or even on Flexa directly?
Um, so there'll definitely be some effect because whenever there's legislation, it's going to hit either us or other projects or something in between. So there'll always be
Hmm.
some level of an effect. But sort of going back to what I was mentioning earlier around just how powerful this concept is and having the utility of these the tokens, these ecosystems, this new form of money. I believe, and our partners believe so strongly of what that looks like, that the long term is generally going to be unaffected, and that this is going to be such a powerful technology that people will use, and there's so much
Yeah.
economic value in using it. It's so inevitable that there might be little, starts and stops as we deal to, especially on our end, being as compliant as possible. So knowing that we are adhering to what's in place, that might have some, small, medium, or short-term effect, but not in the long run. In the long run,
Yeah.
I think, yeah, the value is so strong that we will figure it out, and hopefully we can work, with legislators figuring all this out, our partners, and what all this starts to look like in the future.
Well, I think you're hitting on all the points. Of the two things I think is the fact that you're talking about true value propositions in terms of just economic means for both merchants and consumers. So it's a win-win for everybody that's going in this direction for utilizing this kind of rail system for moving essentially value across what will be kind of the next era in e-commerce. When you look, though, at fraud, because fraud is a big one that's rife in the current system that's out there, blockchain seems to have solved a lot of that inherently. Do you feel that the system that you guys are building has completely addressed this to pretty much kind of eliminate fraud from the system, which I think would be another big advantage for for the entire industry?
Yeah, that's one of the major pieces. So that sort of the transaction validation, verification of funds itself. So that is something that these decentralized networks solve really
Right.
perfectly. And so we really do build that as this is essentially a fraud-free network, and that we can't have fraud in the way that it exists currently. You
Hmm.
can't, take assets that don't exist and spend them. You can't pretend that the assets are yours. So, kind of fraud as it exists now, we have eliminated in this new digital system, and so we've been very proud of that, and we do believe that will continue on. And then we'll see what it starts to look like. But no, that's a big, big part of eliminating that very massive cost in the system.
Tyler, just here recently, AMP jumping off the charts in terms of prices and just the value proposition of where that token is going. How does that relate to what you guys are doing and what the AMP project is doing in general? Is it just kind of a unison lockstep and it's affecting the market position for AMP? Is that how you see it in terms of the value proposition for investors jumping into AMP?
Yeah, I think AMP just being a token from its inception that has very, very deliberate use. So the speculative use, aside, it's people are literally using it. So
Yeah.
they're staking it onto the network. New wallets are coming on board. It's giving the spending capacity in the network. So I would say predominantly everything that we're seeing is around more user growth, more wallets coming on board, starting the integrations, more merchants. So it's really just the network itself growing and people staking these tokens, literally using them as designed. I think we're at something like 60% of all available tokens are staked on the network, and that's continuing to grow. So I think it's really about just people recognizing the utility and actually participating in it and saying, I
Yeah.
want to do this. I want to enable this spending. And then now by virtue of that, getting spending and us seeing the uptick and what that's looking like and new partners coming on. Some of the merchants we had announced even this summer, other new hardware partners, software partners we've been announcing over the past few months. So it's really starting to happen. It's really exciting seeing the partners now participating in this.
Yeah. Tyler, we talked to a lot of founder CEOs like yourself. One of the big challenges that many of the new blockchain companies are facing is the talent pool. If you look at Vitalik and what ETH 2.0 is trying to achieve, a lot of it, they've even claimed, hey, we have an engineering deficit. You look at what Cardano is trying to do with Alonzo, the rollout with Charles is trying to roll out, a little bit delayed, again, most likely because of just an engineering challenges. Are you seeing this as a system-wide challenge yet in terms of being able to get enough engineers bringing on the kind of talent that we really need for all these different projects that are really kind of starting to blossom at this point?
That's a great question. I think in general, you're always going to have, hiring premium. It's always going to be challenging when something is new. Technology industry has now, always been like this. So being able to
Right.
find the very best people in the competition around that's going to be inevitable as well.
Yeah.
But we have brought on quite a few new folks. For us, it's about just what people are looking to do, and us having a real product, real partners. There isn't something of, oh, we are building this in 2 or 3 years,
Yeah.
or oh, this could launch, or this could happen. It's for us, it's very, very real today and only getting bigger. And so finding people that are excited about that mission, and we really start digging in of like what Flexa can do to change how payments work. We found quite a few people that are really excited about that mission and digging in on the tech side. So still by no means easy. It's still going to be a big challenge finding a bunch of great new people, but we're really proud of the folks we have, and great experience across the board. And thankfully finding a lot of people that are motivated by that mission and like kind of what Flexa has achieved and now is
Yeah.
also looking to achieve.
Right. Well, that's good. I mean, it's good to hear because we are, I'm hoping that we continue to see the kind of talent rushing into the space from other sectors, hopefully, because there's just so much demand on this level of programming experience. We cover this a lot on the show here, in terms of really innovative tech, AI, autonomy, and then you get into blockchain technology and where that's moving, and really the companies like yourself that are behind it and the needs that are needed for it is pretty significant out there. But anyway, Tyler, it's been great having you on the show, man. Best of luck at everything you're doing on Flexa. We're going to keep a close eye on things as you guys continue to progress your payments infrastructure. But thanks for stopping in.
Fantastic. Yeah. Thank you for having me. Really appreciate it.
Absolutely. All right, you guys are listening in over on the podcast right now. Make sure and give us a few stars over there. If you're here on YouTube, give us some of your comments below. We love to get your feedback on, CEOs and projects that you'd like to see here on TechPath. It's one of the #1 ways we get feedback from our audience. Of course, you can always hit me up on Twitter @Paul Barron. We'll catch you next time right here on TechPath.